So, 2 days into the new year, investors may be wondering if some of last year's losers will be this year's winners. Take Walmart, for instance. It was the worst performing stock on the Dow in 2015, but today it outpaced the broader market to finish more than 2% higher. Dominic Chu takes a look at whether some names that lost their luster last year will shine in 2016.
Some investors are hunting for value in last year's beaten down stocks, but not all of last year's losers necessarily have an equal shot at outperforming in 2016. So take consumer electronics giant Apple, construction equipment maker Caterpillar, and retail king Walmart. All three are members of the Dow Jones Industrial Average, and all three underperform the index. Some experts think, though, that you have to be choosy about which stocks to invest in.
I think the Apple valuation is compelling. I think it's trading around 10 to 12 times estimated earnings. I think Caterpillar, you have to be a little bit cautious because they're in some industries that are struggling, mining industry, for instance, and they do get a good portion of their revenues from overseas, so they're going to be largely dependent upon the dollar and their earnings. But I would invest in both for the long haul. Walmart's under a little bit of a restructuring right now. I'm not quite as high on Walmart as we would be on Cat and Apple.
Others are looking at bigger picture themes, like which sectors could do well and which ones investors should remain more skeptical about.
When we look at sectors right now, what we see from the estimates, the forward estimates, is two sectors, healthcare, consumer discretionary, still project double-digit earnings growth in 2016. The sectors we would look to, so to speak, stay underweight during 2016 to start. Now, the easy ones are energy and materials. We just don't see commodity traction there yet.
Of course, there are countless bullish and bearish views in every part of the market, but many on Wall Street are approaching 2016 with more caution. And not all beaten down stocks are ripe necessarily for gains. For Nightly Business Report, I'm Dominic Chu.